Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena, and with me is Priyanka Uppal. And in the next half an hour, we will take you through all that news that made headlines in today's trading session and the trade setup for tomorrow. But first up, let's see how the markets closed up. A very volatile day of trade coming in on the D Street, Priyanka. In fact, we managed to breach those psychological levels of 24,000 on the Nifty. In fact, that was the biggest single session decline in the last 1 month. Big events lined up this week. Take us through all the events.
It's the lowest level in last 3 months, but then you know the bigger set of cues which has to come on from the US presidential election outcome on 5th is the D-Day, but then let's see when the voting starts and we get to start reacting on it, and then followed by the Federal Reserve 2-day policy outcome also. So big set of cues coming in. Market traded with intense pressure, what we saw today. In fact, we opened at the highest point of the day, and then there was a swing of clear cut straight 500 points cut came in on Nifty. Banks were not that bad. Banks, though Bank Nifty also dragged 700 points, but banks were not doing that bad. The other sectors were weighing heavily on Nifty, what we saw. You talk about auto, which was the biggest dragger. You talk about energy pack, commodity, PSC, infra, all sectoral. There were big cuts coming in from more than 3% on from these particular sectors. In fact, broader market also, a bad day for broader markets also. We saw mid cap, small cap both losing nearly more than 1.5%, 1.7% precisely. And you know, Ankita, this has been the 12th day that we've seen consolidation in index, but today was a a broad range what we sell. The selling was really broad based, and broad range also was noticed on Nifty for 500 points. Auto stocks, yes, they were the biggest dragger, though the October sales figures, they came in, they actually were beat. They were beating the estimates on many fronts for many of the companies, but it completely failed to cheer the market. In fact, biggest draggers on Nifty were from auto pack stocks only. Hero MotoCorp, Bajaj Auto, to name the few. In fact, TVS Motor, Maruti did recover later in the trade. And in fact, there was a recovery at the end of the day. Today, we saw nearly recovery of 200 points coming in towards the close. Maybe the intraday trades, they got squared off, and that's how we saw a recovery of 200 points nearly on Nifty. But then other stocks, there was a news flow, news which were impacting the other stocks from the pharma space were majorly the Sun Pharma stock, because US court has stopped them from launching a hair treatment drug. This is one awaited on stock that at the start only we saw that the stock was trading with 3% of cut, and in fact entire pharma pack we saw no other pack. In fact, if you talk about all the sectors, they were trading with deep cuts today. It's just that the which one was deeper in red and which was lighter in red. Other than that, of course, Reliance Jio, that one came in a news which has been, of course, reported, source-based news coming in from Reuters that maybe Reliance is gearing up for Jio's IPO soon, but then they would want to contemplate something more on the operational side for the Reliance retail. But that one is a news which can probably lift the sentiment had it been not a bad day for Reliance maybe. So that's major of the news flow, what we saw today. But then let's take a check on the index.
Absolutely, yes. And for that, we have Aamar Singh, who's the Senior Vice President Research Angel One, who's joining us. Thank you so much, Aamar, for joining us today. Aamar, bloodbath in the market. In fact, Nifty hit its 2 months low, and we have breached the psychological levels of 24,000. In fact, earlier on, we were penciling in that if we manage to cross the 24,500 levels is when we probably might be in the comfort zone. Do you see that reversal coming in anytime soon? And also, it's a busy week, events lined up, major massive global events lined up. Where do you see the levels on Nifty?
Yeah, thank you for having me on the show. So, see, what we are witnessing is a continuation of the sell-off which we've been witnessing for the last couple of weeks. Precisely, there were 2 weeks where we witnessed sharp correction, and then there was some consolidation for 3 weeks. Again, today has been, I would say, a rough start, not a bad start, but a rough start definitely. And Nifty breaching the 24,000 level, because earlier 24,000, 24,200, that was acting as a strong support zone. So that has been taken out. And Nifty did trade close to 23,800 odd levels, 815, 816 on the downside, and has pulled back. So we shouldn't read too much into the pullback, because that could be more for the reason being short covering, because we're seeing short built up across the board. And also we've seen that some of the heavyweights like Reliance also trading very close to crucial support zones. So for because Reliance and HDFC, they have almost close to, both of them together have close to 20% weightage in the Nifty. So Reliance is very close to its crucial support zone of anywhere between 1290, 1300 level. So if Reliance triggers a sell-off below the 1290, 1300 level, consistently, we could witness some sharp correction there in Nifty as well. So if Nifty is trading below the 24,000 level, the next level of support for Nifty comes around 23,500, 600. That's a zone, or to be precise, 23,400 to 600 would be the next zone of support. Having said that, as you rightly said, there are a lot of events which are lined up this week. They would have some impact, but I think the US presidential elections wouldn't have that great an impact until unless we see some major reaction in the US markets. So that's one. And other, I would say, the geopolitical tensions also, that's more or less factored in. So it's more or less some selling pressure that is coming. We'll have to wait and watch as to how the domestic flows pan out, because that's going to be a very important way forward, because we've seen significant sell-off by the FIIs. So the levels to watch out for Nifty on the downside, as I said, 23,400 to 600, that's a crucial zone of support. Whereas on the upside, 24,200 to 300, that's an immediate zone of resistance. If you look at the indices, both the indices technically, they are definitely very weak on the intermediate term trend. Short term, we are seeing some sort of consolidation, but again, higher levels are being sold into. So sell on rallies is what is there. Till the time we don't see a breach above the 24,300 consistently.
So market can slip further from here, and we should not read much between the lines in terms of the recovery which happened today. Yeah, it could be a today squaring of trades today. Amar, but then, the kind of market we had today, any good news was unable to cheer the investors. What we saw for Bajaj Auto or Hero, for that matter, entire auto pack. Is it hard to find the buy calls in this market? How would you play?
Yeah, that's very true. So we should definitely be cautious, because see, what we've seen is that the indices have corrected. They've corrected still in single digits if you look at from the top. But in stocks, we've seen correction anywhere between 20% to as much as 40%, 45, 50% as such also in some cases. So having said that, I would say some of the stocks definitely you have to be, your majority of the stocks are now weak on the intermediate term trend. So effectively what that means is that there could be some consolidation, but there are some stocks which are still in an uptrend. So these are the stocks which one can keep a close watch on. In the pharma space, we got Piramal Pharma. That's a stock I've been talking for quite some time. That's still very strong on the long term, on the intermediate term trend, and it has bucked the selling pressure which the overall markets have seen. So this is one stock when any correction can be a buying opportunity. Currently around 275, any pullback towards 260, 265 from a short-term perspective can be a buying opportunity, and with a stop loss below 245 and a target of 293 on the upside. So this is one stock one can keep a close watch on. So the other stocks I would say is ITC, also very close to crucial support zone. That's around 440, 450. So any pullback towards 500 is possible. So most of the stocks have now gone into the trading range zone. So from that perspective, it makes sense. Even SBI, if I look at it, despite the sharp correction, this stock has held firm. So again, sustaining above 825, 835 level, we could witness SBI rallying towards 860 odd levels. On the downside seems to be supported around the 780, 790. So these are a few stocks which one can look at. But yes, one needs to be slightly cautious on the buying side, no doubt.
All right, so SBI, ITC and Piramal Pharma are your picks, Amar, but thank you so much for taking the time out and joining us. And well, let's move on to the word coming in from the wise. Nilesh Shah, MD, Kotak AMC, is seeing a shift from roti, kapra, makan to entertainment, education and travelling. He also shares how one can play the consumption story. Let's go across and listen into his take.
So on the consumption side, clearly the pattern of consumption is changing. From roti, kapra, makan, consumption is moving towards education, entertainment, travel and healthcare. There is also heavy dosage of leverage consumption, where young people don't mind borrowing a loan to go on a vacation. Third, large part of our consumption is also resulting into spending overseas. Indians are emerging one of the largest spender on education and travel in many parts of the world. All these things put together, do I have a doubt on the consumption growing as robust as possible? Answer is undoubtedly yes. We believe consumption story will continue to grow as people feel financially more secured. They are likely to leverage their current income for spending, but we'll have to invest in those companies which are either innovative or which are leveraging distribution network or which are really, really cost competitive. Within this three parameters, you will still get your basket of consumption.
So consumption is a theme on which Nilesh is quite bullish on. We stay for a short break here. More to come on the other side of the break. Don't go anywhere. Welcome back. You're watching Your Trades on ET now. Let's get you action from. Let's get you more from FNO snapshot. What exactly happened from the derivative space? The trend was clearly on Nifty. Bank Nifty was a short build-up. In fact, it appeared as if the trade which shut shop on Muhura day trades, that 24,300, that was appearing as a biggest support because maximum of the put writing was happening there. But then that was completely, the hit was completely blown off and we saw a deep selling coming on. India VIX 16.8 level, we saw call writing at 24,000, not just 24,300, 24,000, 24,100. These were the two strikes where maximum of the call writing happened, and now they seem to be resistance also for the market, the kind of levels that we have closed at. In fact, for put buying, there seems to be no support at this moment. The kind of action what we've seen from derivative space, the put buying is happening at maximum of the put buying happening at the strikes like 23,800, 23,900. So it looks like maybe we are in for more pressure from here, or maybe a consolidation at least.
Absolutely. Now let's move on and shift focus to the fast lane, which is the auto sector, which came out with its October sales numbers. And we'll get you more details on that from Shrishti Sharma joining us with all the numbers and all the companies that performed well.
Well, the festive season sales has been quite robust for all these auto companies. Majority of the companies have done record sales in the month gone by, from the likes of Hero MotoCorp, TVS Motors, Eicher Motors, M&M, and even Maruti Suzuki. They did register a record monthly sales data. But all in all, what we can say is that despite the fact that the numbers looked great, there were some factors that were concerning for the investors, because the season sales was quite good thanks to the great discounts that the companies were giving up in order to push the inventories into the system. The companies were coming out with luring discounts that did come out well in the rural and the urban markets. But post that, as we enter the last 2 months of this particular calendar year, which is generally a lean period for the auto sales data, the investors do worry that there could be some tepidness that we can see in the sales number. Other than that, after the discounts that were given, now the companies can call back some of the discounts, and that also might hamper the sales data. The inventories were already on the higher side, but given the kind of sales number that we have seen, the inventories must have come down. But do note that in the last 2 months, many companies do go under the maintenance and plant shutdown on an annual basis, and that might impact the production numbers as well. So all in all, the sales data were very good. But other than that, looking forward, as we enter the lean period for the auto sales data, there are some concerns on the demand side, on the sales side. But if we see the auto index as a whole, in the past 1 year, the Nifty auto has been outperforming the benchmark Nifty 50 indices. So on the back of that, there must be some mean reversion. And all in all, despite the fact that there has been a great sales data, the companies and the stock prices did crash in today's trading session.
Right, so that means a slowdown which the entire ecosystem is talking about is for real. It's only the festive numbers which were good, which came in for October month. Thanks very much, Srishti, for all that elaboration, the insights in the related to this subject. Moving on, we have Gaurav joining in to take us through the stocks that were buzzing in trade today and the reason behind them. Gaurav.
Well, yes. Let's talk about Reliance Industries first, because as per agencies, companies looking to list Reliance Jio via IPO in 2025, and as a result, we saw some recovery in this counter. Next, let's talk about Info Edge, because when we talk about Naukri's Jobs Peak Index, we have seen a sharp increase of around 10% in the month of October, and we have seen a strong improvement in IT as well as non-IT jobs. Other than that, let's also focus on NCC, because company has said that they have won orders for 3,700 crore rupees in the month of October, and out of this, 270 crores worth worth of order are from water and other divisions. Apart from that, let's also watch out for Apollo Hospital, because company has entered into a long-term contract to build 500-bed hospitals in Worli, Mumbai, and this will take around 4 years with a capex of around 1300 crore rupees. At the same time, board has also proposed to expand its Lucknow hospital almost by 200 beds at a capex of around 325 crore rupees. Other than that, let's also focus on some of the companies where we saw earnings coming in. So first we have is Sun Pharma Advanced Research. We saw numbers were a little weak. When we talk about revenue, that declined almost by 30%, and at the same time net losses widened to around 107 crore rupees. We saw losses in EBITDA as well, and as a result we saw some pressure in this counter. And lastly, let's also watch out for Exide Industries. A flat growth is what we have seen. Revenue increased only by 3.9%, while EBITDA margin declined almost by 43 basis points. Lastly, when we talk about net profit, there we saw an uptick of around 3.5%, but we saw some pressure on the counter. So definitely watching out on all these stocks on the back of the news flow as well as number that we have received today.
All right, moving on to another stock that was in focus today, Sun Pharma, that has suffered a major setback as the U.S. District Court of New Jersey has decided to grant a preliminary injunction delaying the launch of its hair loss drug. My colleague Shrishti Sharma is joining us with the details of the story, and of course a couple of brokerage notes also came out. Let's go across and take a look at what they had to say as well.
Well, certainly a setback coming in for Sun Pharma from the US court, where they have gone ahead and blocked the launch of their hair loss drug, that is Leqselvi, under further legal developments or the expiry of the key patent. Now, Sun Pharma does plan to appeal the decision, but the analysts say that this could impact Sun Pharma indeed onto the earnings that the kind of the analysts were actually building on for this particular drug into their estimates, because so many hopes were building on to Leqselvi's launch, but the company in the last earning call as well did tell us that there were next couple of years that it will take the launch to happen. But on the back of this particular setback, we are seeing a stock impact definitely, and even we have got the calls from the brokerages, wherein first up BofA is saying that the wait for Leqselvi does continues after this particular announcement. Now the litigation has increased further uncertainties that could weigh on the premium valuations. They do assume that the launch could happen now towards the end of FY25. Revenue contribution could start from FY27. Now the drug was a key growth driver expected to be post FY27. The NPV accounts for 4% of the valuation. Other than that, UBS has also come out with a note wherein preliminary injunction of Leqselvi is not the end of the opportunity, is what they believe. The settlement is still one of the possible options. Now the grant of the PI implies the Insight could extract more value in the settlement scenario, but Leqselvi launch could be delayed beyond FY25. And lastly, JP Morgan has also come out with a note where they say that the Sun plans to file an appeal against the judgment. Well noted, could also look to settle with the launch in the times ahead. The worst case scenario could only be able to launch post the product expiry, that could be December 2026. So all in all, this particular move or this particular decision is indeed a setback for Sun Pharma, but the analysts are still hoping on that in the next couple of years the launch could be made by Sun Pharma, and then they will start building that the contribution into the numbers as well.
The sentiment is the entire sentiment on the with which the whole market, the sectors were trading. Maybe that one was something which was a bigger setback coming in for Sun Pharma along with this news. Thanks very much, Srishti, for this news. But though we've started on a very softer note for Indian markets is concerned, US market though started on a good note as far as the November month has started. But then let's get you some seasonality trend also. How has November month done in the past? Somit is here with the data that how has Nifty, Bank Nifty and broader markets have performed in last 10 years in the month of November. Somit.
Well, if you look at the October sell-off, it is very much important to know what are the seasonality trends coming in for this current month, that is November 2024. Now, after analyzing the last 10 years data for the month of November, what we understand is that the Nifty 50 has managed to close in green nearly 6 out of the last 10 Novembers, and the average returns for in the month of November for Nifty 50 has been around 2%. However, the performance for the broader indices was much better compared to the benchmark because the Nifty 50, Nifty mid cap and the Nifty small cap indices have closed closed in green nearly 8 times, while the average returns have been close to 3% for both the indices. Now when you look at the sectoral indices, it's the Nifty Bank, Nifty Media, Nifty PSU Bank indices which have closed in green nearly 8 times, while the average returns have been anywhere between 2 to 6 odd %. Then there is Nifty FMCG, Nifty Financials, Nifty IT, Nifty Private Bank and Nifty Real Estate Index which have managed to close in green nearly 7 out of the last 10 times, while the average returns have been close to 1 to 4 odd %. When it comes to Nifty Pharma and Nifty CPIC index, both these indices have closed in green least number of times, that is just 4 times out of the last 10 Novembers, while the Nifty Pharma's average return was negative 0.6%. That of CPIC index was largely flat in the month of November. Now the most interesting part, that is the stock credit part. Now, and here if you look at Tata Communications and Persistent, they have managed to close in green nearly 9 out of the last 10 Novembers, while the average returns have been close to 6 to 7%. Then there is Birlasoft, Apollo Hospitals, SBI, IndusInd Bank and Biocon which have managed to close in green nearly 8 out of the last 10 Novembers, while the average returns have been anywhere between 5 to 8 odd %. On the negative side, it's Cipla, SBI Card and UPL which have managed to close in green just 2 to 3 times, while SBI Cards has never closed in green in the month of November, while the average returns have been negative of around 2 to 3 odd % for these three companies.
All right, that's how the markets have panned out over the years in the month of November. But it's a wait and watch. Is it rather a rocky road ahead, or things are going to ease out? That's a wait and watch. But for that, it's a curtains done on this edition of Your Trades. Priyanka and I will take your leave. Thank you so much for tuning in.